Welcome, everyone. We're here with Psychology of Trading with Ryan Rozbiani. How we doing?
Doing good, producer AB. How you doing, man?
Oh, I'm good. Enjoyed the weekend, but I'm ready for it to be over so we can get into the markets tomorrow.
Yeah, that's the thing about trading, man. The weekends just they're not just as fun. Things start to get boring. But then, of course, during the weekend we got Bitcoin, which has been annoying the heck out of us. But I totally get it. I like Mondays before trading. I You never really cared about Mondays. The weekend. Let's hope it's 3 days, 4 days. Now we're like, oh, I want it to be. I want it to be shorter. Give me a 1 day weekend. And the worst is when it's a 3 day weekend. So we take it from there.
Yeah, it's funny how once you start trading, that completely changes. You start looking forward to Monday and dreading the weekend.
Oh yeah, totally. Couldn't agree more, man. So today we're going to talk about tonight, whenever you're listening to this, because we're going to have this on audio format too. Whenever you listen to this, we're going to be talking about pumps. There's been a lot of pump talk. You hear about pumpers, you hear about pump and dumps, and there's a lot behind that. So I wanted to tonight talk about that. Well, tonight for us, because we're recording this Sunday night. I wanted to talk about that a lot, but we can't talk about that without talking about the big kahuna Bitcoin real quick before we enter into things. So Bitcoin's been having a hard time. If we just go to like the 5-minute chart, take a look at this. You had massive dips. I've been getting notifications from Coinbase and Gemini all day of it going like, hey, Bitcoin's down 5%. Oh, Bitcoin's up 5%. So it's like, if you just looked at this, it looks like what happened to SPY in March. So you had this massive dip, and now it's kind of fighting its way back up into market open for tomorrow. Hopefully, by tomorrow morning, we get some good action for those plays like Mara and Riot and SOS and all those plays that people love that move with Bitcoin. But, I mean, am I too concerned about this as a long-term player? If we look at the daily chart, realistically, it's not that bad. I mean, we've come down significantly, sort of retraced back to levels of the beginning of March, kind of given up all of those gains essentially and come back to where we were March 5th. And now it's April 25th. So we've given up a lot of gains and brought it back down. But I mean, it's not the end of the world. We've got so many things that happened within this realm and this sphere. But taking it back to pumps, are one of the most favorite Bitcoin cryptocurrencies in the world has now been Doge. Doge has been heavy. People have loved Doge. People love Doge. I like Doge too. I'm not going to lie to you. I like Doge, but I like it long term. I don't like it here. I think it's expensive. But Doge is an interesting one. I guess the chart doesn't pull up, but that's okay. We're gonna go audio centric here. But I've been kind of watching this a lot, and it happens not just in crypto, not just in these stocks. It happens in a lot of different things. These pumps are real. So one rule of thumb for pumps, just starting off the bat, is if you're hearing about it from everyone, it's already probably too late to get into that play or into that crypto or into that kind of stock or whatever it can be. It's already too late for you. It's become known by the masses. The originators of this story have already bought into their shares for a lot cheaper than you are buying it now. So it can get a little bit ugly and it can get a little bit expensive, right off the bat expensive. So like one big play that, I mean, I'm not saying it's a pump and dump, but it's moving like a pump and dump when it's moving like 60%, 50% of the time is SafeMoon. SafeMoon, brand new crypto. It came out of nowhere. A lot of people are trading it. A lot of people are buying it into the hype. It's built in with a fail-safe that you can't really sell it, where if you sell, you kind of take a loss of, I think, 10%, and then 5% of that goes to the kind of the network fees, of which 2.5% goes to the currency makers, and then 2.5% goes to the broker, and then the other 5% is distributed based off of how much crypto you own to the people that own crypto onto the platform, kind of for staking their coin, and then you get the other 90% and deal with all that stuff. So it's weird for me when a cryptocurrency pops up out of nowhere and everyone's talking about it and everyone's jumping into it. There's been a lot of those this week. Doge is interesting because Doge is one that a lot of people say Elon Musk pumps. I like Elon. I love Tesla stock. We talk about that all the time on the After Hours show. But to me, Doge is, I don't like when an asset is dependent on a pump to move. That always bothers me. I'm just going to try to see if I could make a second attempt at pulling up Doge's there it is. There's Doge's chart. I don't like it. I also don't like it when an event is built into something like 420. A lot of people were saying, hey, for 420, let's go and buy Doge. We're going to take Doge to $1. You need billions of dollars of new investment to take Doge to $1 just because of the way the infrastructure of Doge is. It's not like a low float stock where you could buy 100,000 shares and it moves the price. You need a lot to move the price. And there was a lot of whales within Dogecoin. And you can see here, like if we go back to 420, that's around the time when it started dropping. Also, 420 was when Safe Moon showed up. So people took their gains from here, moved it to Safe Moon, and started moving it over and kind of taking it from there. So this is what happens with these things, is when you hear about let's do a coordinated short squeeze or something like that, it's very, very, very rare that it happens. GameStop was very rare. It occurred and it was executed successfully. But then out of nowhere, you heard about 46 other stocks that Robinhood is now not allowing you to trade. And then they kind of distributed your power of one into 46. And once that email came out, I was messaging my buddies like, hey, Robinhood successfully kind of destroyed a lot of this pump because they took all the power away from one stock, where essentially it was two stocks, AMC and GameStop, and distributed amongst these other stocks. You had like Bed Bath and Beyond popping up out of nowhere. You had Naked popping up out of nowhere. All these stocks that no one really talked about, and it made really no sense for these pumps to kind of happen. So it kind of deflated, and then we saw GameStop go from 400 to 100, and it's sort of been stabilizing. And so you see that happen there, but also you have to remember there's a thing in the kind of in the realm of trading where it's called buy the rumor, sell the news, which means by the time you get here, like get to 420, that's the news, that's the sell-off. It happens, people get out, and then a lot of people are left holding the bag. I got so many messages on the 21st of people saying, hey, I bought Dogecoin at 26 cents, 36 cents, 38 cents. What do I do? What do I do now? I'm down so much percent. I'm like, man, we discussed this yesterday. I really wish you didn't buy it, but that's okay. Look for a negative strategy. Look for pops. Look to get out. And it's really not good if a crypto or any stock or asset is depending on one person to pump it. There's a lot of stocks out there. I won't mention any because we don't want to disparage any companies or stocks, but that revolve around one person on FinTwit saying, hey, all right, we need this person. And then if this person disappears, oh no, the stock's going down. Well, it doesn't make sense. There needs to be merit to this for it to not be a pump and dump. And if you're hearing about it coming through layers, there's a lot of different institutional based setups where they front load, then they tell their friends, then by the time it comes to you on Twitter, it's a little bit too late for you to kind of get into it, and you get left holding the bag. So how do you avoid the pump? How do you get away from these pumps? What do you do? First of all, you cut yourself away from the pumpers. You can easily identify pumpers. Once a stock is hot and everyone and their mother is talking about it, and these people are telling you to go buy the dip if the stock is dipping, go do this. Oh, I'm promising you that this is going to make a stupid amount of gains. That's a pumper, man. That's someone who's pushing you to go out there and buy a stock or buy an asset or buy a crypto or coin and say, hey, go buy this, it's going down. This person bought, like, for example, these people that were telling you to buy Doge up here, like we're going higher, they probably bought down here. There's people that bought it sub 10 cents, or even if they bought it here, they're doing decently fine. They've probably sold off here. They're telling you because they want this to go up so that they can unload, and then you're left holding the bag. Nothing can go up forever, infinitely up forever without coming down. It's like a rocket ship. Take a look at Doge here. It goes up and then it comes down, goes up, comes down, goes up, stabilizes around here. Not really, comes down, comes down. It's like a rocket ship. You can't go straight up to the moon without coming down to refuel for a little bit. That's just how physics works. That's just how stocks and assets work. You need to give it some breathing room. Let's take a look at Bitcoin. It does the same exact thing. Now, Bitcoin is extremely hard to pump because it's an asset that's worth like thousands and thousands, tens of thousands of dollars now per coin. But all right, TradeView, we get it. So there's a lot that goes into this. And the thing that bothers me the most is a lot of new traders come onto the scene and they talk about all of these stocks, and they come into this world and they see all these FinTwitter people or people on Reddit talking about a certain stock saying, hey, for example, Dogecoin, let's say it's 1 cent, it's going to $1. Well, if you don't know that's true and you don't really know that that's how that works and how that pans out and how stocks or assets move, you're going to be like, all right, sweet. This thing's at a penny. It's going to go to $1, thousands of percents of gains. Let me go ahead and buy this now. And let me put a lot of money into it that I probably shouldn't be putting into it. And then hopefully it goes up. And then if it doesn't go up, then all right, sorry. What are you going to do? You can't hold that person liable. They're not, quote unquote, not a financial advisor. You can't hold them accountable. You can't do anything, and you're left holding it back. So one way to avoid a pump is, let's say you're brand new. It's really hard to tell what the pumpers are. You start applying the basic fundamental rules of stocks and stock trading and stock investing. Don't invest any money you can't afford to lose. So pretend you're going to a casino. All right, I'm going to put, I got $1,000 to play with. I don't care if this goes away. I can still pay my rent, pay my car payment. I can still put food on the table. $2 cost average into it. I don't care what it is. I don't care if it's Bitcoin. I don't care if it's Apple stock. I don't care if it's Tesla stock. I don't care if it's SOS or any other penny stock. Dollar cost average into it. That way, if the stock dips, you still have powder to dollar cost average, and you can bring your average cost down. So let's say you buy $100 worth of a stock, and then it dips 20%. You could buy another $100 worth, and then you can kind of average down to a middle ground of what your price would be. That way, you're preventing yourself from losing a lot of money, and you're protecting your investment as well. In worst case, you can cut it without losing too much money. Also, rule number 3, have a stop loss set. I mean, I don't, like, for example, I don't think on Robinhood you can put stop losses on Doge, and I don't know if on Binance or any of these platforms or SafeMoon or any of these other assets. I'm not singling these out. They're just easier examples for me to point out for assets that have been moving quickly, both up and down, that we can talk about without kind of throwing people for and having to teach people what these assets are. Set a stop loss, especially for your stocks. If, like, for example, one notorious stock that is known to have gotten pumped the last year was, for example, UAVS. Now, the stock came out successfully now. It's about $10 a share. But at that time, people were pushing it, and it was moving very, very weird. It wasn't moving. Another one is XSpot, which is the COVID testing thing. I personally was a huge fan of XSpot when it first came out. Now, that being said, I bought XSpot around $1. People were pumping it to like $3, $4 a share. Because of course we didn't know how COVID was going to work. We were hoping, I was personally hoping, I've been on the record saying, I think XSpot, had they executed properly, they could have been what the people in the airports are, that the security people in the airports, I'm blanking on the names of who they are. They could have been that for, what's up?
TSA agents? Is that what you're
Exactly. They could have been the TSA for COVID testing, but they didn't execute properly. They raised a ton of money. They kept opening up new organizational places within airports that weren't properly built. The people that were working at those stations didn't have the proper education, even to this day. You remember we had Kevin Ryan on. The comedian, his wife was going to Germany. He spoke about it on a podcast. He said, hey, we went to the XSpot testing location. We asked them, hey, she's going to Germany. What test do I need to get? And they had no idea. They had no idea. That's not good. You need to be able to execute properly on a vision for it to work. So I cut it a long time ago. I cut it when I was noticing that people were going to airports and that XSpot was saying we're here, but it wasn't there. Now you come to rule number 4. Do some due diligence on a play before entering it. It's quite simple. Just go out there and do some research. XSpot, let's say XSpot, for example, and we're not bagging on XSpot, any investors or XSpot there. We don't mean any disrespect. It's just an example that you can go and research, see if these locations exist. Do a Google search. With this one, you can probably check out reviews online, see if the reviews make sense. Or a company like SOS, for example, right? Got attacked by a short seller. Do your own research. The short seller lays out for you, hopefully, if they're a short seller that's worth anything, will lay out for you how to get to their thesis as to why they believe a company is a scam or isn't doing it right or something's wrong. Follow those breadcrumbs. Don't just be like, oh, no, can't be real. Short sellers suck. They're all the devil. Well, the devil's making money too. That means they have to be right sometimes. Sit down, do some research, see if these make sense, follow the breadcrumbs, and then execute your way into it. Be like, all right, for example, they're saying the buildings with SOS. Well, if you just Google mapped it, people were able to disprove that and said, oh, no, this building here is a hotel, but this building here, this pre-facing building, has the same exact number, the 88 or 888 or whatever it was, has the same exact number. And no, this facility exists. Oh, video came out. It's real. So-and-so did this research. You can disprove a short seller. You can prove it. You need to stop looking for confirmation bias and start looking for bear cases to understand that, hey, this doesn't work. Now, let's say you're a brand new trader. You just got to Twitter. Of course, the first thing you do is you start following all these people with 100K, 200K, 500K followers just because they're throwing out tickers out there and you're just chasing. I've seen this all the time. You're chasing, all right, X stock is going up, Y stock is going up, all right, let's jump in, buy this. You have to remember, by the time that stock gets to Twitter, most of these folks have a Discord. It goes through the Discord. Before it goes to the Discord, it's their buddies in direct messages. So there's filters before it comes out. By the time it gets to Twitter, it's usually too late. And it's very, very hard to find trusting people on Twitter that are putting out stocks. And that makes sense. Also, another red flag, if they're putting out a stock without any due diligence attached to it, when they say, all right, go buy, for example, Tesla stock, do your own DD. All right. That means go do your own DD. Listen to the quote unquote pumper. Go do your own DD. Don't just buy the stock because the person said it's right. No one is ever 100% correct. Warren Buffett has had failing stocks. Kathy Wood has had failing stocks. Kevin O'Leary has had failing stocks, and these are just people names that we know, and they've had very successful stocks. No one is ever right 100% of your time. That's why you should never go out and look for a savior on Twitter, especially your fellow traders, to kind of help you get to where you are. You can do your own research. You can find resources. There are paid resources that are out there that kind of help you get to where you need to be. Those resources will provide you with a lot more information. They're hopefully privatized, and you can kind of follow those there and take it from there and learn from there at that point. And that being said, producer AB, have you ever been in a pumps? Like, have you ever fallen for any of these pumps, man?
I have. I mean, I've bought in at the top of a few different things. Because sometimes even to me, like stuff just seems, it looks too good and you want to get in, you don't want to be missing out. And then you learn your lesson the hard way. But yeah, I mean, I think the days are behind us of when we were like 6 months ago. It was, even if you were aware that there were pumps, it was kind of easy to get in on some of these stocks, like as you mentioned, that were low floats, that if you knew people were really going to be trying to run them up, then you could get in them and try to just make a quick 10% or whatever. But it doesn't seem like that's been working as well as of late. So yeah, I mean, like you said, I think the bottom line is if you're investing long term, do your DD. Find some companies that have, good management, good sound fundamentals, and buy them and forget about them. That's what I think. And if you're trading, we've talked about this before, Ryan, where the difference between trading and investing, if you're just trading, getting in and out real quick, it's still important to know what you're trading and where it's going to be. Because obviously if you're trading Dogecoin, it's going to be different than Bitcoin. There might be a little bit of correlation, but they're different assets. So they have different, they have different tendencies. So that's my thing, is regardless of, whether you're trading or investing, do your DD and don't think, the FOMO thing, there's always going to be other investment opportunities, so if something goes up 50% and you miss it, you missed it. But hey, there's going to be something else that's going to go up 50%. There's going to be something else that's going to go up 100%. So as long as you're not tied to anything and you're able to, keep a level head in the market, you'll be able to find these new opportunities.
Well, I totally agree. When I first started, Reddit was the only source that we had to kind of go and find plays. Because Twitter wasn't built out the way that it was now. I don't even think many people were using Twitter back then. But when on Reddit, the one good thing you had was you could find people, but even there, like, people can sew together any form of garbage DD. You'd have to kind of look for your own and find your way out of there. And of course, I've fallen for these too when I first started trading. You find someone on Reddit that puts out like 3 or 4 good plays. You follow them, they execute, they make you money. And again, we're talking about the markets in 2017, so it's kind of very similar to how the markets are now. It's like 4 or 5, 6% was fine. You were cool with that. But now you're kind of mirroring where we were in 2017. So a lot of people aren't used to that. So a lot of desperation has kicked in. And I think that's what's causing a lot of these pumps to become successful and look successful, because people are desperate. They're looking for this. They're willing to go through 18,000 steps to buy 1,000 safe moon coins or whatever to be able to kind of hold on to and kind of have it go up. And they're willing to hold it up and down 65%, 70%. That's weird for me. If an asset is fluctuating like that, I would be scalping it. I wouldn't be holding it. Again, it's really also weird for me that it's got a thing that's built in where it's made for you to kind of hold on to it. But again, I've done a little bit of research on it, but I'm not too crazy about it. But again, as long as you do your own research, you should be totally fine and you should be able to protect yourself. It's kind of the same way with it's kind of parallel to long-term investing. Do some research. And also this little thing you got here, charts can help you understand if you're in a pump and dump. If you're all the way up here in an asset, like for example, Bitcoin, and someone says, oh, Bitcoin is going to 100K, and we are right now at 65K. So you kind of, what you do is easily just zoom out and be like, all right, where has Bitcoin been? Has Bitcoin ever been to 100K before? No. Then how would Bitcoin go to 100K right now in the next 5, 6, 7 days if it's never been there, if the volume activity doesn't work? Oh, Bitcoin has consolidation and dips. Okay, so what I'll do is I'll do some research. I'll wait for the next consolidation and dip, and then I'll buy in for the next leg up. Oh, look what happened. We got a nice little dip. Oh, look, it's consolidating. It should probably head back up based off the patterns we see here. Congratulations, you just avoided a dip with a simple, basic visual tool. You didn't have to know anything about charting. You didn't have to know anything about Bitcoin. You didn't have to know anything. You just have to know that, hey, Bitcoin doesn't go straight up. Nothing ever goes straight up. I can pull up any stock here. Tesla, which I love, which I'm a long-term investor in, we'll pull that one up. Tesla, okay, that's weird. Okay, I think I just pulled up the wrong Tesla. I'm in crypto, that's why.
They probably have a crypto named Tesla just to
they definitely do. They got everything. They got now, instead of like Safe Moon, they have like Safe Mars, and they've got a bunch of different stuff. So take a look at Tesla, for example. Tesla, the same exact thing, ups and downs, ups and downs. For those of you that are watching, just imagine a mountain range. It just comes up and down, and you can pull it up yourself on your charts and kind of see. Like, for example, when Tesla was at 900, it's probably not a good idea to buy. You can use many, many different tools and indicators, like, for example, MACD. So if we turn on MACD, you would have probably been able to see on the MACD that 900 was the top. If you look here, where are we? If we just look here around 900, if you look here, for those of you that are listening, the MACD flips right away at that point, and you can see it says stagnant down. You could have bought it at lows here and then rode it back up. So even the best plays out there, the best companies out there, the best stocks out there will always have dips. If they're meant to last long term, if they're meant to have good fundamentals, they'll have dips. Of course, scalp traders and very seasoned traders that have been in the market 5, 7, 10 years, even 3 to 5 years. Some of them, some younger traders are learning a lot faster now, which I have to give them a lot of credit to. But I would say that you can probably use these opportunities to scalp it, and you'll probably see people going, hey, I'm in stock XYZ, and they'll be like, all right, we just made $10,000 off of this thing. And you're like, wait, this is a pump and dump. I just got pumped and dumped on. What the heck? How did this person make it? Well, they're a seasoned trader. They can understand that they can play these pumps to their advantage. And some people, credit to them, can play pumps to their advantage. But if you're a new trader, especially a new trader, please be careful out there. If someone's talking about a stock, it's probably too late. And if everyone's talking about the stock, it's already too late. Like, for example, when Sundial was at $3-4 and we were all tweeting about it, we were celebrating because we just sold. Everyone was saying publicly they sold. So, for example, I always sell. If I say if I sell a stock, I'll say it on Twitter like, hey, I sold stock X that I've been in for a while. Like SOS was a stock that I talked about here on Benzinga with Spencer when it was $4. I talked about it here. I said, hey, I'm buying it. The stock did well, went to like 12, 13, 14. And then I put out a thing saying, hey, I'm selling it at this price, and this is why I'm selling it. And I might get back into it later, but right now I'm selling it because of this. I'm transparent. Everyone isn't like that. I got a ton of hate and lost a bunch of followers because of it, but I don't care. I like to be transparent that way. But most people might not do that to you. Most people, as you've seen now, the stock prices come significantly down on SOS, and it does get, now we saw a failed pump that pushed it to 6. People were saying that this thing will go to $127 a share in one day. That just doesn't make sense. There's no fundamental way into it. Unless Warren Buffett sells all of his Coca-Cola and buys SOS stock, that would not move. And so please, please be careful with your news sources. Go to a place like Benzinga. If you think that I'm just pumping Benzinga, do a Google search. See if these things that people are saying make sense. Do your own research. Learn terminology. You don't have to start trading to make money right away. You can start trading and learning and then going into trading, because if you learn these fundamentals, it will protect you and your money, which everyone values their money. We're here to make money. We're not here to lose money. So a form of making money is saving your money and investing in yourself and learning these tools, or finding someone to teach you these things on YouTube, a paid program. Invest in yourself. A lot of people are worried about paying for a program. Oh no, I'm not a real trader. No, you are. Pay for a program, pay for a course, whatever it is, learn what it is, and then come out a better trader and then enter the market and start killing it.
Yeah, I know. It reminded me while you were talking about if everyone's talking about a stock, it's probably too late. I think Warren Buffett had a story where he was like, when I started getting stock tips from the doorman at my building, then that's when I knew, the market was at a top or whatever. And he was like, that's what. So just be wary of if you're hearing, everyone talk about Dogecoin, like Ryan said, then it might be a sign that it's a little too late. But with that being said, there was a point in times where you could have bought Bitcoin when everyone was talking about Bitcoin at 18,000 or whatever, and if you just would have held, then you'd be doing fine now. So it all depends on the asset, but do your own DD, figure it out if there's a good reason that everyone's talking about something, or if everyone's just talking about it because it's had some crazy returns.
Right, exactly. Find out what's going on. Like for example, the dormant thread, it's hilarious. Like you've been seeing a lot of stuff on. I've been seeing a lot of stuff on Twitter where people are like their moms calling them and asking how to buy Dogecoin. Like,
right.
Doge is different. Doge has been around. Doge has had its ups and downs with Bitcoin, with Ethereum, with Litecoin. It's been one of those altcoins that survived the test of time. Just like, for example, Ripple, like that, like other cryptos that are out there. But these newer ones like SafeMoon, like Cardano, like the Mars coin or whatever coins are out there, they're not tested. They're not battle tested. You have to remember there are developers behind these coins who can sell all their coin and leave. That's what happened with Litecoin. Litecoin was on a massive tear in 2017, went all the way to like $304 per coin. The CEO sold all of his coin and just left and said, "Oh, I don't want to look like insider trading or whatever." Even though, for example, Tesla's CEO Elon owns stock, but he sold everything and the coin crashed. And it just recovered a few days ago, but it wasn't able to sustain that coverage because you still need confidence built into it, and fear of a massive drop that big will psychologically destroy a coin or destroy a stock or destroy an asset. So that's why you see if a stock or something dips that heavy without a reason being like other than like something going wrong or bad news, it will be very hard for it to ever recover.
Yeah, 100%. I couldn't have said it better myself.
So let's talk a little bit about into next week, into this week. This is a really big week for SPY coming up. I pulled up the picture that you guys tweeted about the earnings that are coming up for this week. I'm watching a lot of these earnings. I actually did a longer video on my YouTube channel talking about this. I'm really interested to see how Tesla plays out because I think Bitcoin could be affected. I wonder if Tesla will come out and buy more Bitcoin now that it's cheap. I think that'll be really cool to watch. Microsoft, Apple, Starbucks, JetBlue. I expect JetBlue will have parallel earnings to Delta and the other ones. And then, of course, eBay, Apple, Facebook, Spotify, Boeing, Spotify. If you guys are listening on Spotify right now, do us a favor and subscribe to the YouTube, to the podcast. It'll be really, really awesome if you did that. And of course, we got Caterpillar, which could be interesting with the bill coming up for infrastructure. Amazon, Twitter. We all love Twitter. Follow us on Twitter. And the oil guys operate, and then Clorox and AbbVie. So it's going to be an interesting earnings coming into next week. I'm looking forward to it, and we'll be on after hours for two of the big earnings days, Tuesday and Wednesday. We'll be on after hours talking about the big boys are all doing after hours after close reporting. So it's really interesting to see how that plays out.
Yeah, I'm excited for that. Both those days we'll get to break down. On Tuesday we'll get to break down Microsoft, AMD, Alphabet, obviously. So, and then the next day we got Apple, Facebook. So these are some big boys. We got a big earnings week coming up. So I'm excited. It's going to be a jam-packed week.
Yeah, man, I'm excited because the big reason these guys are the heavy hitters is these are all the top positions within the S&P 500. So it's a make or break situation here, especially Apple. Apple's the biggest position within the S&P 500, or as most people know it as SPY. So if this one does bad and tanks, you can expect it to reflect. And the big thing in the back of everyone's head for companies like Apple and Qualcomm and AMD is the big chip shortage. So if it's negatively affected them, we could have an ugly opportunity in the market for us to be able to buy some cheap shares.
Yep. Well, you guys don't miss out. Tuesday and Wednesday, we'll be here after hours breaking down those earnings. Anything else, Ryan?
I'm good, man. I mean, I don't see any questions coming in from the chat in regards to this topic, but if anyone wants to hit us up on Twitter, you can hit us up there.
Let me share our Twitters real quick in the chat.
Sure.
And then if, like Ryan said, if anyone has any questions, just tweet at us and we'll get back to you.
There's a funny comment earlier. Someone had said something about safe. Papa Dubs said, "I've heard SafeMoon is the young hot thing." So I don't know, man.
Well, it was last week. We'll see what it does this week.
Yeah. And by the way, I'm not rooting against any of these. I hope they all turn out successful, and I hope they all turn out well. Ross Eck is asking, what's the podcast name? It's The Psychology of Trading.
Yeah, and we don't have that page up there yet, but this will be, I guess, well, because you need 2 episodes on there before it starts posting. So we'll get this one and the first one up there. So you'll be able to go back and listen to the first episode. And then from there on out, every week, that episode will be uploaded Sunday evening, or at least before market open on Monday, and it'll be there.
Yeah, it's going to be exciting. So subscribe to this channel if you guys want to see it there. You can hit me up on Twitter if you have any questions about all this stuff, and all my links. And I did a massive video on earnings this week. If you just go to ryanstocks.com, the first link is my YouTube. You can go there, and I did a massive overview of this earnings and kind of price targets that I want to see for these companies. If they drop, that's when I want to start buying these stocks. So, folks, I think we're good here, producer EB.
Yes, sir. All right, y'all. We'll see you next Sunday, but before that, we'll see you on Tuesday and Wednesday for after hours.
All right, folks. Thank you so much. Have a great night. Thank you, producer AB.
Thank you, Ryan.